Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, we discuss everything about stock markets, how the markets have opened in trade today, and what are the factors that will be important for the stock markets to track, and for the investors and traders, how should they really proceed with their investments in stock markets? What's the best way to keep yourself and your capital protected, yet at the same time achieve some returns even in this volatile market? Well, the markets have actually opened lower for the fifth straight session for both the Sensex and the Nifty. There's been just a 0.25% cut at open in today's trading session. Of course, overnight, when you saw the US markets trading, there were sharp losses overnight that you had seen, especially the Nasdaq slipping very, very sharply and now entering the bear territory as well, with 20% lows, being hit from the record high levels of Nasdaq as well. Remember, yesterday we had also seen the Nifty Bank slipping into the bear territory by being 20% off the record highs as well. So there is a wide concern emerging across the globe of stagflationary concerns, where the growth is stagnating and inflation is continuously rising. What is this stagflation? We'll help you understand throughout the trading session as well. But let's quickly look at the opening levels today to understand how we have opened in trade today. The Sensex was down 85 odd points at 52,757. The Nifty was down 33 points, or just 0.2% in trade, at 15,830. Just about 1,238 shares advanced, while 550 shares declined and 91 shares remained unchanged in the opening action. In terms of specific stocks, you had the likes of ONGC Power Grid, HCL Technologies, NTPC, and Tech Mahindra as the top gainers on the Nifty on the back of continuous rise in the crude oil prices. Meanwhile, on the losing side, you had stocks like Hindalco seeing some profit booking after yesterday's very sharp rise in the metal space. SBI Life, HDFC Bank, Hero Motocorp, and Aisha Motors as the lower, as the lows being hit on the Nifty as well. On the technical front, now experts do believe that the immediate support and resistance for Nifty are placed at 15,700 on the lower side and 16,500 on the higher side as the resistance as well. For Bank Nifty, experts believe that the support and resistance is placed at 33,500 and 35,100 respectively as well. Clearly, the focus is on the developments on the Ukraine Russia war front, which has now entered the 13th session, and with the no clear signs of any de escalation, no consensus on the talks. The third round of talks held between Ukraine and Russia yesterday, nothing positive really emerged out of there. So there is still uncertainty as to how long can this war really prolong. Can this also escalate from here on further? So those are some of the worries that investors really need to keep an eye out on, and the direct impact of all of this crisis is being seen on the higher commodity and crude oil prices. In yesterday's trading session, we saw the crude oil prices, reaching to almost $140 a barrel before coming down and trading, throughout the session at around $125 a barrel. There has been some ease off in overnight trading session on the crude oil prices, but prices for everything from gasoline to aluminium to wheat have actually risen quite dramatically, marking the most significant weekly rise in raw materials since 1974 oil crisis as well. So talk about agri commodities, talk about industrial commodities like metals, or the oil and gas commodities. Everything is shooting through the roof right now. Specifically, brokerage houses still have some reports on individual stocks, so let's look at those pockets as well. Overall, the arching theme will still remain cues from Ukraine Russia throughout the trading session, even today, amid very, very volatile session that you are already seeing in the initial trading minutes as well. Morgan Stanley has come out with a report on Hero Motocorp and believes that continuous inflationary pressures could delay the demand recovery for the auto sector and for Hero Motocorp. The brokerage firm has an underweight call on Hero Motocorp shares as well. On real estate space, Jeffries has come out with a report saying that they believe developers with positive free cash flow in FY23, like DLF or Sobha or Lodha, will be something which will be on their radar. Rising developer optimism will propel supply to a 9-year high in 2022. Also, so positive report coming in for the real estate sector. On the cement space, Credit Suisse has come out with a report on Ultratech Cement. It believes it has maintained an outperform rating on the cement maker stock, as the crisis-driven spike can actually be short-lived. So those are some positive comments coming in. So far, you have actually seen negative impact on the crude oil prices, of the crude oil price rise on these cement maker stocks as well. Apart from this, we do have some other stocks that will be in focus today. Say, for example, ICICI Bank is planning to raise up to 8,000 crore rupees through infra bonds to finance projects in the transport, power, and affordable housing sector. So keep an eye out on ICICI Bank as well. Tata Consultancy Services, or TCS, has said that its 18,000 crore rupees share buyback will open on March 9th and will close on March 23rd. So on February 12th, the company announced the share buyback program entailing 4 crore shares at 4,500 rupees a piece. So the stock will be in focus because of that news flow as well. Remember that overall, the fear theme in Dalal Street is actually getting more profound and palpable as per most of the experts on the backdrop of stagflation. Like I pointed out, the street will definitely keenly watch out on how RBI tackles with a backdrop of higher oil and commodity prices, and most importantly, the growth supporting fiscal policies as well. The FIIs continuously sell off as well. They continue to sell in the Indian markets even in yesterday's trading session, with over 7,480 crore rupees worth of shares being sold yesterday. DIIs offloaded. In fact, net somehow combated that. Amount of sell-off by buying about 5331 crore rupees worth of shares in the Indian markets yesterday. Overall speaking, now Barclays has actually revised its CPI inflation upwards to 5.1% on a year-on-year basis in FY23. Versus the earlier estimate of about 4.5%, which was in line with the RBI's estimate as well. So, those are some of the concerns that are going to be weighing on the investor sentiment throughout the trade today. How will the policymakers really steer through, and how soon can you really expect, oil marketing companies to really jump and raise the petrol and diesel prices, which have remained unchanged for over 4 months now, amidst this sharp surge in crude oil? Of course, they're making huge losses right there. Some of the reports say that they may immediately seek to raise 6 rupees per liter and absorb some of the losses as well. We were expecting that between these 7th and 10th, or maybe just beyond 10th, you may see that sharp shocker on petrol and diesel prices. And how does that really impact inflation is something that's going to be an immediate worry for the stock markets domestically as well. Overall speaking, it's going to be a highly volatile day yet again, but we'll just have to see whether there are any signs of positivity leading to some clear direction of the markets going forward from here. Thanks a lot for tuning in for now, but we'll keep you posted with everything that's buzzing on D Street. Thanks a lot for tuning in.